Kitco Mining's special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corps.
B2Gold is going to have to buy some parkas for some of its workforce, as the company recently announced that it's going to buy Sabina Gold and Silver and its Back River development project in Nunavut in Canada. To tell us more, I'm pleased to be joined here at PDAC 2023 by its President and CEO, Clive Johnson. Welcome to Kitco, Clive.
Nice to see you again, Paul. Thank you.
Thank you for joining us. Now, you were hinting for quite a while that B2Gold's next move would be to acquire a North American asset. But I think your $1.1 billion Canadian offer for Sabina took many people by surprise. Why Sabina and why now?
Well, it was a great project, first and foremost. You're right, we did want some geographical diversification. I think our shareholders wanted to see that as well. And, obviously we've often thought it would be nice to have a project in Canada. And, 40 odd years ago, I was a line cutter and a claim staker in the Yukon when I was a young lad. And so we've come full circle now back to the north again. But a great project. Good jurisdiction, very good relationships with the owners of the land, the Inuit population, high grade, attractive economics, even with the challenges of the north. And also it fit well in our wheelhouse because we do have northern experience from building the Kitco mine in the early 2000s in far north of Russia, which was very challenging logistically. So some of those same construction guys are still with the company. We felt it was the right time, and Sabina's done an excellent job on all sorts of things, exploration, permitting. It's into construction now. We like the construction plan. We like the schedule. So it's a good mix. We're going to work together on this going forward, and a good acquisition for us, and one we're very, very excited about. We did a lot of due diligence work and confirmed that they've done really good quality work. It's a very good project.
Well, congratulations on that. B2Gold is already a circa million ounce a year producer. Back River is going to be, 350,000 ounce a year. So another step towards B2 becoming recognized or more recognized as let's say, a tier one major senior gold company.
Yeah, it fit very well for the reasons I've said. The other thing that allowed this to happen is our financial strength. We have no debt. We have $650 million US in the bank. We have access to capital, $600 million revolving credit facility from a great bunch of banks that's undrawn right now. So we have the financial capability to take this on as well, and it fits in our wheelhouse in that regard as well. And the payback, it's a very attractive economics. So the payback for Goose should be something less than 3 years payback of the capital.
Okay, now Back River is permitted, financed, and most of the civil works have been completed, which is often the trickiest part of a build. So in some ways it's about as de-risked as it could get. Was that a key factor in this being the moment when you made the bid?
Well, I think there was a number of factors. One was the fact that Sabina was looking to do this on their own and was making very good progress. So I think for Bruce McLeod, who's done a great job, their CEO and their board, they were keen on realizing the value for the shares by growing the asset. So it was a time of couple of years of discussion about what would it look like. And frankly, I'm sure a bittersweet decision for them in some ways, and I've been there before, but they did, I think, a good deal for the shareholders. And our cultures are very similar, our corporate cultures. But the financing was an important thing as well, because when you're a single asset company trying to finance a gold mine, the financing terms can be challenging, or at least it could be relatively expensive. Whereas for us, with our strong balance sheet, we were able to come in and basically take over for the rest of the financing responsibility with our cash in hand and our access to low cost loans from our banks. So that was an important timing factor as well before they drew down the rest of their financing as they had planned. So
I think that's a factor that often gets overlooked. In recent years, a lot of mine developments by single asset juniors have run into trouble, and one of the reasons there has been the financial strength or lack of their balance sheet. And I think I recall you saying during the conference call announcement that bringing B2Gold's balance sheet will enable you to advance some things that they would have to put off because of their financial limitations. You don't have that, so you can really sort of build it to its optimum aspect.
Yeah, and good point. And two aspects of that would be, one, we're actually, because they were cash constrained, and when you've got financing that's not cheap, you're going to try to limit your costs. So one of the things they wanted to do was, but didn't do, delayed, was to go underground earlier and get access to good grade material. So they could start they were planning 3,000 tons a day to start. and they always wanted to go to 4,000 in the first year. But because of our financial strength, we're going to spend that money now, so we'll start at 4,000 tons a day through the plant. And the other reason I think where the balance sheet really helps out is in exploration. Because we've always been, I think, as a producer, an excellent exploration company. That's our history. So we're able to explore this really incredible opportunity of the belt. So whereas they were constrained in exploration expenditures, obviously, while you're building a mine, we'll probably have a budget of $20 million this year to explore the ultimate potential of Back River. It's an 80-kilometer belt of incredibly prospective ground, and they've had lots of good hits that they weren't able to follow up on. So we think the exploration is about 9 million ounce resource now. It has the potential to grow dramatically over time.
And as you mentioned, Clive, you've had a history of showing that your exploration is very good and has been able to grow assets. Were you surprised that there wasn't a competing bid for the asset from someone like Agnico Eagle Mines, which also has other Arctic operations or high Canadian Arctic operations, or Kinross Gold, which obviously has operations in Alaska? It had the Kupol operation that you built in Russia until last year and now has a production gap to fill.
I wasn't really surprised. I mean, there are not that many companies that could take on a project like this in the north with the challenges of it. I can't really speak for Agnico Eagle. It's a company I admire and we get along very well. Their comment to me, frankly, and they publicly, they're busy. They've got lots going on. So they congratulated me on the acquisition, look forward to working together in the north where we can. And so they saw it as a positive thing that it was a Canadian company carrying on the legacy of that. So other companies are busy, and in this case, we were able to offer the Sabina shareholders a significant premium. In fact, it was a 45% premium above where they've been trading at around the time we announced the deal. And some people in the investment community are negative on premiums. Premium isn't relevant, it's the value. So we said we would pay 1.1 billion Canadian to acquire them with our shares. And we obviously think there's more upside as business people. But therefore, I wasn't concerned about where the stock was trading or what the premium was. The premium is inconsequential. It's the value of the asset, what you're getting it for. So at the end of the day, because of that very fair offer, I think it's a very good offer, fair for them. I think that probably prevented others from considering coming in over the top. So a lot of other companies are busy, may not have the northern expertise, and the offer was a very fair, sound offer. It's not closed yet. The shareholder vote will be April 19th, but all the signals we're hearing from both sets of shareholders is very positive support for this deal, which seems to make a lot of sense.
I really like the way you phrase that, value, not premium, because so many people get fixated on the premium or lack of premium. There's a massive deal on the table elsewhere in the gold sector, and it seems to be focused on premium or the lack of the premium there. Perhaps that's not something to get into another time. But before we came on air, we were chatting about this deal, and you were talking about the potential opportunities to work with Agnico Eagle Mines in the Arctic for the mutual benefit of both companies and all the various stakeholders there. Can you tell us a little bit more about that?
Sure. I mean, we're in the very early stages, of course, getting this deal closed, but the opportunities very clearly in the north. Are there areas that we can work together? Are there areas we can work together in terms of education, housing, healthcare? There's a lot of things that you can do, and you've got two responsible Canadian mining companies with the ability to do that. And I know Agnico's done great programs in their past, and we've done it all over the world in terms of all those things you can bring with ESG, education and support for the local community. So I think we'll look at what things we can collaborate on, and they've expressed an interest in that, and I definitely share that interest.
Okay, while we're on the subject of ESG, Clive, a couple of years ago you launched the Rhino Gold Bar to help fund the conservation and preservation of the black rhino in Namibia. Polar bears are also endangered species, so do we potentially see a Nunavut polar bear gold bar in the future? Well,
we'll be talking to our Inuit partners about that, so I wouldn't rule out a polar bear bar or maybe a polar bear coin or something like that. So it was a really innovative approach to a mining company being conservationists and environmentalists, and we're very proud of that, and we'll always be looking for innovative ways to do things like that, to also help the people that are working to save the species and thereby save the species as well as participate in that. Okay, thank you. Now, obviously a lot of attention is focusing on Sabina and Back River at the moment, but you also have a much broader portfolio, and which is still growing and developing. Fekola springs to mind there. What else are you trying to do around the world, or what else is underway around the world to continue growing B2Gold? Well, Fekola itself, we're doing two phases of expansion of Fekola. So Fekola is producing just under 600,000 ounces a year now, which is pretty remarkable because we started up with the idea of 300,000 ounces. So we've expanded the mill twice. It's been an incredible success, but also exploration has been really successful. So we now have a 20-kilometer belt there. And in the far north, an area we call Anaconda within the Fekola complex has shown some excellent drill results, to the point where we're just completing building some roads to truck down some of the soft weathered ore from there down to the Fekola mill, which will continue to keep the mill topped up at Fekola for years to come. But in addition to that, we're doing a study which will be out in June, looking at the economics of building a second mill up in the Anaconda area, given all these exploration results and new ounces. We've got more drilling to do, and we've got a study happening. It'll come out in June, and we're expecting it to be very economic. The concept, if it is to build another mill for maybe $250 or $300 million at Anaconda, and that could produce up to 200,000 ounces of gold, additional gold production a year. So, and it should be very attractive because there's a soft material, there's no blasting, no crushing, and there's some good grade. So the economics we anticipate will be good. As I said, we'll come up with that in June. That gives another potential 200,000 ounces to Fekola, taking it to 800,000 ounces a year. So between Fekola and Goose, you have another 500,000 ounces of annual production just over the next 3 years or so. So that's dramatic growth. But we're a very focused company when we get into something. You won't see us do a lot of M&A from here for a period of time as we digest what we're doing. I think that's very important. Part of the key of our success is delivery and focus. We don't want our construction team trying to do two things at the same time. So Fekola and Goose, they work very well in scheduling together to be able to do both over the next 3 years. So we'll continue, though, exploration worldwide. We're a very good exploration company, as you mentioned. We're exploring in Finland. We're looking at doing some things in Uzbekistan, and we're always looking for opportunities. We've been very successful in accretive acquisitions and finding more ounces at our properties, but also new discoveries. The cheapest ounces are always the ones you find. So we'll be doing that.
Now, you're currently about 1 million ounce a year producer, as I mentioned. Is there an optimal size for B2Gold? 1.5 million, 2 million ounces? Is that something you think about?
I don't really look at it that way. I mean, growth is what our shareholders want. Responsible mining, a big dividend, and growth. And we've delivered in the last 12 years from zero production to 1 million ounces a year now, and now we go the next step of growth. I'm always reluctant to put a number and a time frame on it, because then you've promised something, and then you may feel pressure to do a deal that maybe isn't really the right thing to do. So we'll see. Obviously, if you look at the last 10 years, 0 to 1 million, may not be unrealistic to think the next 10 years or less could yield that again. So there's a couple of good pieces in place here, and as these projects develop and we get them in production, of course we'll be looking. We're always looking. There's not that many great projects in the world, but we found one here, and we'll always keep looking at what's happening out there.
Okay, so aside from hopefully closing Sabina transaction later this year, what else can we expect to see from B2Gold in 2023?
Well, you're going to see that. You're going to see the expansion of Fekola as well. This year, a lot more drilling. We've drilled 40,000 meters so far at the Fekola complex. Not only are we seeing this attractiveness of this weathered material at surface, but beneath that, we're seeing really good intercepts in drilling up and down this belt, showing that there's some very good grade in the sulfide, which is similar to the Fekola deposit. So a real focus there. Ultimately, how big can that get? And lots of drill results coming out of the Goose area, the Back River area. We'll be aggressively exploring Goose itself, which is open to depth, the nearby George deposit, which is 2.4 million ounce resource so far and open, and up and down that belt. So lots of results to come from us, and maybe some good exploration developments in other places like Finland, etc. So we'll have a lot of news flow, and I do think that we're due for a re-rating in the market as we show people we've done the M&A that I was promising. And that's always a bit risky to go out as a CEO and say we're going to do M&A, because some people might say, well, I'm not going to buy the stock, I'm going to wait till they announce the deal they're doing. But don't like surprising our shareholders, so I wanted to be transparent and tell them where we're trying to go. So I don't think that many people were surprised to see us do something, and the support. I've been doing this for a long time. This deal has got more support on both sides of shareholders than any deal I've done before.
Okay. You were at the BMO Global Metals and Mining Conference a couple of weeks ago in Florida. We're at PDAC now. Let's broaden out that. What's the investor vibe now? Aside from your own shareholders, what's the vibe you're getting from the investment community?
Yeah, I think there's some pretty good support there's definitely good support for responsible gold producers that have low costs and the ability, I would say, to grow. It's definitely a bit of a transition stage. There's several gold producers today that don't have a CEO, for example. So there's a bit of a change happening, and I think there's going to be continued focus on M&A, and I think that's a good thing for institutional shareholders, for all shareholders. We probably need a few less companies, but the better run companies hopefully can continue to grow. So a lot of people are suggesting gold may make a big move here. At the end of the day, I've with low cost production, we've never been believers that gold has to go higher. It's nice to say that we're actually a little bit ambivalent about the gold price. Obviously, we're highly leveraged to it, but we don't need gold to go higher, and clearly we haven't over the last years to grow our company and be profitable.
Okay, well, Clive Johnson, I wish you the best of luck at closing the Sabina transaction, and thank you for joining us today.
Paul, always a pleasure. Thank you.
And I'm Paul Harris. Stay tuned to Kitco for more from PDAC 2023.
Kitco Mining's special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.